Hello, it's Ryan here from Mortgage Introducer at Mortgage Business Expo in London, and I'm here with Alice Watson of Retirement Advantage.
That's right, yeah.
Good to meet you. So what new developments do you expect to see in the equity release market?
So for us, there's a lot of innovation going on at the moment. I think lenders are really putting their heads together and seeing what other possibilities there are to get best customer outcomes. Over the last 6 months, we've seen quite a lot of innovation in the market already. So, for example, Retirement Advantage have launched a range of lifetime mortgages for buy-to-let properties. So that just gives landlords an option to release money from their property tax-free, leaving their portfolio intact. And it's just adding to the property types, the product features, just giving people a bit more choice, a bit more flexibility and certainty as well. So I think the market will carry on in that direction, perhaps looking a little bit at the hybrid space to help people with the interest-only mortgages going into retirement. So I think that might be the future of travel.
Okay. Do you expect good rates get any lower than they currently are?
I mean, the rates, there is a bit of a rate war going on at the moment, or there has been. I think that for some people, rate is very important, but I would always say that cost isn't the only consideration.
Right.
I think when products get a little bit more sophisticated, offer more product features and perhaps more certainty, I think it shouldn't always be about rate. And obviously, as a lender, we've got to factor that cost into the development. I'm not sure whether they'll go lower. I'm sure they might drop a little bit, but I have a feeling that we're at a plateau now, and hopefully we'll still get best customer outcomes, but I'm not sure how much more they'll drop.
Yeah, sure. I mean, it's amazing. What is it? Sort of 5% a year ago almost.
Yeah,
it's been a huge drop,
exactly.
So yeah, you mentioned that it's quite a competitive market.
Yeah.
So what do you think's the USP for you guys?
For us, it's definitely about innovation at the moment. So we've released our buy-to-let lifetime mortgages, but we're also having a play around with the product features just to try and give people as much certainty as possible. So we offer voluntary repayments where you can pay up to 12.5% of the capital and interest without making an early repayment charge. So I think for us, it's just that certainty, flexibility, and the peace of mind that we give customers with the product range.
Do you have any plans in the next 12 months you could share, of products perhaps? Or?
Well, we are still looking at innovation. We definitely want to develop the product range a little bit more. I can't tell you exactly what we're working on, but definitely keep an eye on us because we do want to have another record-breaking year next year.
Okay, right. What innovation do you expect to see in the wider equity release market?
In the wider equity release market, I think that we'll start to see perhaps people trying to help those with the interest-only time bomb. So I think we'll start to see maybe some more hybrid mortgages coming on the market. Perhaps those who want to make interest payments have a higher LTV perhaps. I think also more flexibility, so people just adding more product features and giving customers more flexibility and more choice in how they release the money from their property.
How do you think the market can continue to grow in the next couple of years?
I think that one of the big things we need to do is really get advisors interested in the market. We know that a lot of people hold their qualification, but they're not actively writing. So it'd be great to get those people up to scratch with everything, to teach them about the product features, carry on with the education, really get more people writing business. Because I think there's currently about 1,000 advisors actively writing, whereas there's about 9,000 people with the qualification. So if we can scale that up, it would be huge for the market.
Do we need to train more advisors perhaps?
We do, and just make sure that people are looking at retirement income more holistically. So we know that people's pensions perhaps aren't going to provide them the retirement income that they want. We've done research, we did a home truths report that showed that 2/3 of people recognise that there's more wealth in their property than in their pension pot. So advisors need to be able to have this holistic approach so that they can give the best advice to their clients, especially since the pension freedoms, the tax changes.
Yeah, I mean, perhaps it's up to the government to get this message out too.
It is. It's a big education piece from everyone, and the lenders have got a part to play as well. We need to carry on banging the drum, talking about it, getting more interest. And that's where innovation comes in as well. The more options, the more range, the more that people will start to engage with it. It's doing phenomenally well at the moment, but there's always scope for growth. So it'd be great to carry on increasing the levels.
All right, brilliant. All right, Alice, thanks very much for joining us.
Thank you.
Hope it all goes well today.
Thanks.